Our entire global financial system is about to change. Real-world assets are becoming tokenized and put on the blockchain, securities as well, and more transactions are going to be done through stablecoins. What does this mean for us? Well, we're going to be transacting more and more on-chain, and we're going to be storing our wealth more and more on-chain as well. That means everybody is going to have to need a wallet at some point. Our next guest, Michael O, is the CEO of CoolWallet, and he's working on bridging the gap between our present and our future. Michael, welcome to the show. Thank you for being here. Thank you for sponsoring this interview.
David, thanks for having me. I'm a fan of your work. Honored to be here.
Thank you very much. Thank you very much. I want to start by showing you a clip of Vlad Tenev. He is the CEO of Robinhood, talking about this future that I kind of referenced in my introduction. Take a listen.
10 years where it is ubiquitous. I mentioned in my talk that tokenization is a freight train. It can't be stopped. And I think eventually it'll eat the whole global financial system. But it's going to take time for everyone to be comfortable with it. So that's why.
Okay, tokenization is going to eat the whole global financial system. Tell us about what that means. What is tokenization? How is that going to completely change the financial system?
Tokenization brings everything on chain, and it makes market global, 24/7, programmable. So if you house deed, fund shares, or invoices, they live on chain. You don't just need an account anymore. You need a key. And that's where wallet plays in. Whether it's settlement at 2 a.m. or automatic payouts, the wallet, it's your control surface for real world asset.
How is our life, our regular lives, not just people investing, we're professional traders in crypto, but everyday people, how is the life of the everyday person going to change when most assets are going to live on chain?
A simple story. A nurse in Europe converts part of her paycheck to stablecoins now and support home the same day and keep savings under her control. There's no weekend delays, no withdrawal queues. That's just life logistics. It's not hype.
Okay. So what does this nurse need in this example? What does she need to store these tokenized assets?
She needs a wallet. She needs a wallet to store her stable coins or any other crypto. And she can send the tokens, stable coins to her relatives at home.
Okay, so before we go any further, how is a wallet different from a bank account? Why can't this nurse just store her tokenized assets in her bank account?
Well, because her bank account has more bank hours, withdrawal limits, counterparty limits. And with a wallet, there's no more restrictions I just mentioned.
Are you suggesting, Michael, that in the future, pretty much everybody is going to need a wallet?
Oh, I am suggesting that, yes.
A wallet, for those of us watching, is something that we store our blockchain on. So there's different types of wallets. There's hot wallets and there's cold wallets. Just explain the difference, please, Michael.
Hot wallets, they store your private keys in an internet-connected environment. So it's at risk. It's more dangerous because it's easier for hackers, for bad actors to get into your blockchain addresses and move your assets without your consent or against your will. And a cold wallet puts your private keys offline in a isolated environment that's not connected to the internet. So it's way harder for hackers or bad actors to get into it.
Why can't I just keep my cryptos on let's say Binance or Coinbase or any other large exchange? I convert my fiat, I leave it on the exchange, and it's easy. What's wrong with that?
Well, there's nothing wrong with that, but centralized exchanges are great for on and off-ramp liquidity and familiar user experience, but they come with counterparty limits, withdrawal windows, pay per day caps, destination controls. You're essentially holding a login and an IOU, not an asset. Bitcoin was born after 2008 to remove the single pinch point. With self-custody, you send what you want, when you want, where you want. There's no bank hours, no withdrawal queues. The future is a hybrid balance. Exchanges for access and liquidity, wallets for saving for sovereignty. And our job is to make the bridge between them safe and nearly frictionless.
There's a huge growth in crypto adoption worldwide. I want to talk about growth first, and then we'll talk more about how wallets work. So this is from Chainalysis. And actually, in 2025, India was number 1 in global crypto global adoption. United States was number 2. Retail centralized service value received ranking is ranked 10. Centralized service value ranking 2. DeFi value ranking 2. Institutional centralized service value ranking 2. So basically, there's a lot of adoption happening, not just in Southeast Asia, but also in the United States right now. Let's talk about what's driving this adoption in 2025. I know there's a bull market, but what else?
Well, I think there are two things. ETFs is definitely one of the driving force, and another one is the tokenization of almost everything. RWA, stablecoins.
Okay. Now, can we start to see a future in which we start to get paid, like our salaries are getting paid on chain?
Well, there are a percentage of the companies in the world now that are already paying salaries, paychecks in crypto. And taking one of the public listed companies, financial conglomerates in Japan, SBI, the news is starting from, I think, last year. They started paying bonus in XRP to their employees already. So that's happening.
Several landmark legislative acts were signed this year, including the Genius Act, which I'll repeat for my audience, prioritizes consumer protection, strengthens the U.S. dollar's reserve currency status, and bolsters our national security. It basically provides clarity on how stablecoins will operate. The Genius Act requires 100% reserve backing with liquid assets like U.S. dollars or short-term treasuries. It requires issuers to make monthly public disclosures to the composition of reserves. So stablecoins issued by the government have to be backed by treasuries. Now, if you were given the choice, this is basically the government greenlighting the adoption of stablecoins. If you were given the choice, Michael, would you like to be paid in your salary? Would you like to be paid with stablecoins or fiat USD? Which is the same thing. I mean, stablecoins are based on fiat USD, but they're just on-chain. So offline or on-chain USD, basically.
On-chain USD, online, on-chain. It's more instant, it's global, it's programmable settlement, and it's less bank fees, less bank hours.
Okay, so let's just compare. Right now, I have all my cash in a bank. Okay, it's all fiat cash. Let's suppose I were to move half of that into a ColdWallet. And by the way, this is one of your CoolWallet products, which we'll talk about. I move it on a ColdWallet, and I'm able to have these faster transactions, like you said. How will my life change once half my savings is now on the blockchain in the form of a stablecoin?
Okay, there are many examples. So let's say 90% of your US dollar is sitting in one bank, and that bank may go bankrupt in a very extreme situation.
Okay.
It's not impossible, but taking a look back a couple of years ago, we saw many banks collapse in the US already, right? 2008, that's an incident, and I think there's Silicon Valley Bank that go bankrupt a couple of years ago as well. And we don't want to, be any of the victims of those incidents. So that removes a lot of risk there. And if you are sending your US dollar across the border, you're sending for you have a lot of papers to fill, and you have a pay limit per day. Let's say it's 100,000 at your bank. So that's that feels strange to me, because I will feel like this is my hard-earned money, and I should decide, and I should be the one who says where I want to spend it and how I want to spend it, instead of somebody tell me how I should control my asset.
But I can put my savings in a high savings bank account, and the bank will pay me some interest. So that's one advantage, right? Can I do that with stablecoins?
Yeah, you can have way more choices on chain now. You can lend it to others via a decentralized lending protocol, like Aave, for example. and there's more. So in this current market, you are seeing from 4% yield to 12% yield product of those stable coins.
People are concerned about security. That's the main reason why you would put your keys on a cold wallet versus a hot wallet, like you talked about earlier. And of course, centralized exchanges carry risks, like you mentioned. We've seen FTX collapse. We've seen Celsius collapse. Celsius was an exchange, but it was an asset manager, so even large institutions can collapse. But earlier this year, we saw something interesting. Bybit was an exchange that got hacked. It was the largest crypto hack of Ethereum in history. And what Bybit taught us was that cold wallets are not invulnerable. Can you just explain what happened with the Bybit hack and what you've learned from that incident in regards to cold wallet security?
So what happened to the Bybit hack was they were using Genesis Safe smart contract multi-sig wallet for their Ethereum-based tokens. And one of the final signees was Ben himself using a hardware wallet. And the takeaway isn't that the hardware wallet failed. It is that blind signing signature is dangerous. If a user interface lies to you and the device cannot show the true call, users can be tricked. And our solution is human readable, clear signing of smart contract calls, displaying who, what, and how much on which chain before the on-card approval. If you see it, you can decide.
So your company makes cold wallets. Now, before we talk about the products in detail, what is your overall design philosophy? What is the philosophy behind the form of the cold wallet? And what is the major problem with self-custody right now that you think is out there that you need to solve?
It's three pillars. One definitely is security. And we use CCEL 6 plus secure element to protect users' private key. And second is user interface. We use mobile first user interface. So users no longer need a laptop, desktop. Everybody has a smartphone now. So it has to be smartphone first. And third, it's the form factor. It's a credit card size that lives in your actual wallet. So you can carry it every day.
The cold wallet that I have in front of me, it looks like a card. So it's literally shaped like a credit card and it can fit in your wallet. Why did you opt for this design versus, let's say, a traditional hardware cold wallet that basically looks like a hard drive?
Early hardware wallets were bulky dongles, like USB's hard drives. People didn't carry them, so they didn't use them. And we flipped that. A credit card form factor that live in your real wallet, a mobile-first connectivity, like encrypted Bluetooth, NFC, and a secure element that keeps keys in hardware. If it's easy to carry and easy to use, people would actually self-custody.
Again, this looks like a card. It's easy to carry, but it's also easy to lose. It stores your private keys on this card, correct? So what happens if I lose this card? Or let's say a thief steals my wallet, steals this card. Wouldn't I just lose my private keys?
You use your backup to move the funds to a fresh address you control. If you only lost the card, you're fine. The attacker can't sign. If you lost both phone and card, your recovery plan kicks in. Restore from your written backup or backup card, then sweep funds.
Okay, but so let's say I lose my phone and my key. Let's say I'm traveling or something, right? Everything's portable. I can't access my backup. My backup is at home. What do I do?
You can't access your recovery. Then you wait until you go back to get access to your recovery.
Oh, no, I have my recovery. Let's say I wrote down my seed phrase somewhere.
Yeah.
Right? I have two cards. One's a backup. My backup is at home. But I'm traveling right now. I lost my card, so I can't access my card at home, but I have my seed phrase. What do I do?
Oh, you still buy a new card and enter your recovery seed phrase into the new card through the app, and then you will be able to get all your access back.
Okay. In terms of security, how is your card different than, let's say, a traditional cold wallet that is bulkier in form? We know about the form factor, but what enhancements to security have you made?
Okay, two things. First, we designed a 2+1 factor authentication. So to enable one transaction, you need the card itself, and you need the phone, its user's phone, and you need the biometric authentication of the user. So if you don't have any of the three, you won't be able to make a transaction. So that's first design. And second, it's the smart scan feature that we develop for clear signing purpose, in order to protect users from phishing attacks or user interface manipulations.
Okay, so I have two cards here. This one's called the CoolWallet Go. It's designed for people on the go. This one's CoolWallet Pro. It's got a screen on top, and you need to click a button to activate it. Now, this one, you have to pair with your phone through Bluetooth, and then this one, the Go, you have to pair through NFC. So what's stopping a thief from stealing my signal, either through NFC or Bluetooth?
All the signals sending through Bluetooth or NFCs are insensitive. We only share public shareable data. And those data, even if a hacker or a thief intercept it, they won't be able to make any change of it or decode it back to your private key.
But the seed phrase that's generated on my app, so I have to download the CoolWallet app. The app generates a seed phrase when I activate a card. Where is that seed phrase stored? Isn't that stored in some centralized database that's owned by your company?
The seed phrase is the master private key of all of your blockchain addresses, and it only lives in the secure element of the card. We don't have a backup, and we shouldn't have a backup. Only you have the backup that's in written form. And that's why when it's very important for you to keep the recovery seed phrase very safe, because if you lose that seed phrase, we won't be able to help you.
So there's no way for a hacker to hack into the CoolWallet website and steal user data?
Well, they can hack into our website as they like, but there is no private key data in our website.
There's been a lot of concern over the last, couple years of corporate hacking. So not just company information, but also client information. So clients are very concerned about having their personal information, and especially something like this, their private keys, available for hackers on a database that's hackable. All right. I guess you've addressed that concern. What about for people who aren't technical? What is the secure element inside the CoolWallet actually do? Can you explain that?
A secure element is a separate tamper-resistant chip built specifically to withstand physical attacks. They can work together, but the secure element is the gold standard for key custody.
Right, but I can I take the card and insert it into my computer somehow and then hack the chip?
You can't. As I mentioned, it's built to withstand physical attacks. So when you try that, the card or the chip will destroy the private keys itself.
So basically, to access my private key, I'll need my phone, which has the app. I'll need my biometric scan, which accesses the phone. And then from there, if I want to, let's say, send money to somebody using my CoolWallet wallet, it will then require me to use my key on this CoolWallet device, and I have to tap it to my phone. I have to physically tap it to my phone. That's how I validate the transaction.
Yes.
So
correct.
basically, you need biometric scans, the phone, and the key. Without all three, you cannot authorize any transactions.
That's correct.
What about fake wallet apps? How do you stop a fake wallet app or a tampered build, let's say, from tricking users?
Okay, there are two ways that we are preventing such attacks. So first, the card itself has a algorithm, a software that we designed to only recognize the official build. That's first. And second, all of our official apps come with a smart scan feature to prevent risky approvals or drainers.
Well, you've mentioned, I think before, social engineering, not hacking, causes most crypto losses. So can you tell us about the number one scam that you see that users are falling for, and how can something like CoolWallet help to stop these kinds of scams?
Okay. It's phishing smart contracts or bad actors telling you to send your crypto to a specific address. And there are so those are typically called approval tricks, infinite allowances, fake mints. So in our app, our smart scan feature, we flag risky patterns like infinite approvals, suspicious senders, and default to least privilege approvals. And we shown an approval dashboard so you can revoke anything you don't recognize. So if you are seeing something like red warning sign, just don't do it.
The person sending the phishing, there's no way that they can steal my crypto, even if they have my address, correct?
Even if they have your address, they are not able to steal your crypto unless you approve them to do so. That's why before you sign any smart contract signature, you have to read what the app tells you. If it tells you that after signing this, you'll be losing 10 million USDT, for example, just don't do it.
Let's say users out there watching who are interested in getting a wallet, what you need to do is in order to send money, you need to give the opposite party, the person you're sending money to, an address, a wallet address. So that information is public. Now, what happens if that wallet address is passed on? Are there any risks involved whatsoever?
When that address is publicized, if somebody else see it, the only risk you will have is they will be able to know how much balance you have on that address, but no one is able to do anything to the address. They cannot move the funds from your address to another unless you approve the transaction yourself in your wallet.
Well, what's your long-term vision for cold wallets in general? Do you think it'll one day replace banks?
Well, I think they will coexist. The long-term vision that I think is, I would say 20% of the everyday finance goes to bank and the rest goes to wallets. Bank for the credit and then lending, and the rest you can do it with your wallets.
People still like NFTs, and more people are adopting staking products. So how is CoolWallet adopting these trends?
We constantly integrate with new features that the market demand. Currently, we already have staking services from proof of stake staking and lending products like Aave, for example. And NFT is built in already a couple of years ago. So whenever a new crypto product comes out, we try our best to integrate it as soon as possible.
One of the concerns of cold wallets in the past is that it was difficult to on-ramp directly from fiat. So not just cold wallets, but even hot wallets online. Sometimes I have to on-ramp to, let's say, Coinbase, and then send my Bitcoin or whatever from my Coinbase account, from my Coinbase wallet address to a hot wallet address online. I can't just directly on-ramp into the hot wallet with fiat. How do you solve that problem?
Starting from 2 weeks ago, we launched a new feature. It's called Fiat On-Ramp, a fiat deposit feature, where you can create your US or Europe SEPA bank account under your name, and you can wire the actual US dollar into that bank account. And within 20 minutes of receiving that US dollar transfer in the account, those money will be instantly exchanged to stablecoins of your choice on chain into your wallet.
But doesn't that make you a centralized exchange, Michael?
It doesn't. We work with partners that have banking licenses, so we don't act as the centralized exchange or the bank. we work with third parties. So third parties does the KYC. We don't keep the any of the user data.
Okay, so if somebody asks you, well, so you're not going to be like FTX, take our fiat before it's converted and then invest it, for example. Is that possible?
It's very unlikely to happen because, as I mentioned, there's only 20 minutes window after receiving your fiat dollar, and it will be instantly sent to your wallet on chain. So money is in your hand within 20 minutes.
All right. Well, what's the next feature we should watch out for?
We are expanding our bank account feature to more regions. Hopefully, you will be seeing more Asia countries markets open for the dollar transfer, and we'll be integrating more mainnets blockchains. Currently, we support more than 40 mainnets and all the EVM networks, and that's supporting at least 100 million thousand types of tokens, and we'll be expanding that as well. And of course, security and user experience, we continue to improve.
Okay, very good. Thank you very much, Michael. Where can we find out more about the product?
You can check our website at CoolWallet.io and our X account, CoolWallet.
Okay, before we go, I just want to ask you, because you're based in Taiwan, that's also where I'm from. How is the crypto adoption and how is the ecosystem in Asia compared to the West that you've noticed?
One statistics I can share with you is that Taiwan is a country with 23 million population, and the registered KYC exchange accounts is above 2 million already. So we are looking at around 10% of the market adoption here. I would say that's very good. And you can already live most of your on-chain life here. You can invest, earn, pay bills or merchants via crypto rails or crypto debit cards and move cross-border same day. So I'd say it's very mature here.
Okay. Do you have any guess as to what that percentage may be in, let's say, 5 to 10 years? It's currently 10%, you said.
I'd say it's growing to 20% within 5 years. As just this year, one of the major telco companies already launched their local crypto exchange with fiat on-ramp feature. So it's more mainstream now.
What I would like to see is, let's say one day we have this, what you have here, except it's like a debit card. And I can go to any store, and instead of tapping my phone, right now I have Apple Pay, right? I can tap my phone and I can pay for my Starbucks. But now in the future, I can pay with my stable coin. Is that future likely? Is it possible? Can you design something like that?
It's definitely possible. In old days, all the merchants post terminals were dominated by Visa and MasterCard. But we are seeing more digital payments available in the market. And I think most of them are looking into how to bundle that with crypto payments. And so I think we are seeing that future in the next 5 years.
Yeah, because right now the issue is, let's say I have a bunch of Bitcoin and let's say I just want to spend it. I don't have to, instead of transacting with fiat or converting it into a stable coin, I just want to tap and then select an option, and the screen will say, hey, do you want to pay with your existing holdings, Bitcoin, stable coins, Ethereum, whatever, and I can just pick Bitcoin and it'll just charge my Bitcoin. Wouldn't that make it so much easier, right?
Yeah, it's possible.
Okay, anyway, let's put the link down below, so follow CoolWallet there. Thank you very much, Michael. Great talk. Thank you.
Thank you, David.
Thank you for watching. Don't forget to like and subscribe.